Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, I'm back behind the mic. Today, we're not so fired up. I actually lost money, big money, with my NVDA trade. We're going to talk about that today. The reason I want to talk about me losing money, I want to talk about how I have set up a covered call for which my shares were seriously underwater, the expectations of that covered call trade, and what would happen if NVIDIA blew past my strike price and I'm left holding the bag of possibly losing money on the entire trade. And that's exactly what happened. So we're going to talk about this, and we're going to talk about what I could have done to prevent this. So look, if you're in the selling premium game where you write covered calls on your shares or you use your cash for cash secure puts, this is the kind of stuff you need to master to be good, generate the cash flow you need to live the good life, but also you have to have a plan, you have to execute the plan. I had a plan, I didn't execute the plan. So we're going to talk about that today, so maybe this video ups your game. Hey, look, if you like anything you hear today, I want you to subscribe to the channel. I come back every week, show you timely and relevant covered call and cash secure put trades trying to up your game. Hey, look, if you like the video, bang that like button. It lets me know you like what I'm doing. Now, that's absolutely right. If you bang the like button, you let me know how I'm doing. I don't look at video views anymore. I absolutely love the likes because when you like the video, that tells me you want me to come back and share my stories so I can up your game. So take the time right now, bang the like button because I truly love it. I feel it. And I want to come back every week. Now, real quick before we get to that trade, I want you to go to cptdashboard.com for a couple reasons. One, I want you to absolutely download your free spreadsheets. I have spreadsheets where you can track all of your trades. You can do all kinds of calculations with in-the-money calculators, total income trackers. The poor man's covered call tracker is there. It's all free. No spam, no ads. All you have to do is download them. You have to keep the numbers in front of you. If you're going to use a stock multiple times, like I talk about here all the time, you have to keep the numbers in front of you so you know when you're profitable. Okay? I offer up all those spreadsheets for free, no spam, no ads. Go get them. They're all free. But while you're there, I want you to scroll down to the middle of the page and listen to the 6-minute video of my best friend and mentor, Jerry. There's a reason why I'm here on YouTube, and it's because of him. 6 years ago, Jerry took my hand. He showed me how he generates money in retirement selling premium. Now, for a lot of you that have picked up the selling premium game, writing covered calls or selling cash secure puts, you know that this is not rocket science. But when you start, sometimes it can feel like a second language. The stock market can be overwhelming, and when we're talking about selling premium, it can really slow you down because you're not quite getting it. You actually think trade you make might be a bad thing, right? Having your shares taken away. I get it. I've heard your story for years. But once you learn it, once you do 1 trade, 2 trades, 3 trades, next thing you know, you don't need me. You don't need anybody on YouTube, and you're generating cash flow. Well, Jerry did that for me. And over $430,000 later, that's right, 6 years ago, when I started, that set me on a course over the next 6 years, pocketing $430,000 on the table, paying the bills, living the good life. But it's a lifestyle now. My part-time job in retirement is going to be selling premium. I'm going to wake up every day, put in the time, sell the premium, and we are absolutely going to have that monthly income. That's what we do here. And I'll tell you what, it started with Jerry. If you can find a mentor in life, a trusted friend, somebody that you can talk to about the stock market, you're absolutely going to have a different experience in life. Because I'll tell you why. Because I can go to a party and talk to anyone about sports. We could talk about all kinds of things for hours. But to find that soulmate of the stock market, where you can literally talk stocks for hours like Jerry and I do, well, I'll tell you what, that's a special relationship Because most people I talk to, hell, if I don't lose them within the first 30 seconds, well, they might be interested, but by the time we get 5 minutes in, their eyes are glossing over. Look, I'm telling you what, finding somebody that you can talk the stock market to is a blessing in life because you can talk about all these things. Find that person, okay? Look, go to cptdashboard.com, click on my video with Jerry. Okay, so before we get to that trade for which I lost $3,388 with NVDA, we're going to talk about that. Let's talk about where I'm at right now. So we're in the middle of November. We have a month and a half to go. I am not going to find myself at 75,000. I thought I would get to 75,000. I'll tell you what, man, the 9 to 5 has absolutely destroyed me this year. Next year, we're going to have a great opportunity to do what we do. And to be honest with you, I'm going to set a goal for which I want to break an all-time record for me. But that's next year. That's pie in the sky. What have we put on the table this year? Well, as of right now, about $54,000. Now, a couple things are going to happen here. One, I'm going to have to deduct the $33.88. Took a loss. That comes off the books. But one thing we're going to add, I don't know if you remember, but earlier this year, I did a long-dated cash secure put on the TQs, pocketing $4,800 in near-term cash flow on the table. Well, somebody assigned me their TQ shares. So that trade comes off the board. The $4,800 splashes our account. And yeah, I'm stuck with TQ shares much lower, but the premium gets put on the table and now it becomes cash flow, and we're going to have to work those shares. So right now we're actually going to be at about 57,000 for the year. Now I have a lot of trades coming off the books in November, so that's going to bump up. I'm going to try to make 65,000 to finish the year, and that would be a success. So let's go ahead and get into this NVIDIA trade, because this is where I want to talk to you about how I obtained the shares. The shares fell considerably. I had to make a decision as I wanted to use the covered call on those shares. I picked a strike price that I felt like I could manage, being that the shares were down so far. And of course, the stock blew past the strike price. Let's go ahead and take a look at those trades so I can set this up for you. Wow. August 19th is when I placed the cash secure put, for which I then obtained the NVIDIA shares. Man, seems like forever. But this is when I used the cash to obtain 100 shares of NVIDIA. Now, the strike price was 180. The shares had actually fallen. I thought 180 was a great opportunity. Well, yeah, it blew past that. The stock market itself fell. So NVIDIA finds itself tumbling from above 200 all the way down to $117. So of course I'm giving the shares, right? I mean, I obligated to buy somebody's shares at 180. I invested $18,000 to generate $10.47 in cash secure put premium per share. So I'm going to upfront $18,000 to buy somebody's shares at 180, giving me 100 shares. That premium, right, for putting up the money to buy somebody's shares at 180, essentially giving them insurance. Well, I collected $1,047 up front in cash flow. Now it's a waiting game. We have to wait till September 16th to see if NVIDIA falls below 180. Well, of course, we know it did. It fell to 117, and John is being stuck with NVIDIA shares at 180. I thought it was a great opportunity. I didn't think NVIDIA would fall much below 180. Well, the stock market essentially took a bath, and here I am. Now, let's fast forward. I am assigned the shares at 180. It's trading at 117. I tell my members at 117, I decide to let the members know what I was going to do with those shares and talk about my plan. Now, what you're about to see is what my members get. We talk about everything selling premium, covered calls, cash secure puts. You see the world through my eyes. And I'll tell you what, being an active and successful trader, you get to see all the trades I post. Whether I'm in or out, whether I win or lose, does not matter. You see all my active trades. Right now, I have almost 10 trades on the books. You didn't know it, but I do. Here's the deal. I'm always spinning my plates of cash flow. If you're out there trying to generate cash flow in retirement, or maybe you want to pay some bills and you want to peek over an active, successful trader's shoulder, that's me. And it's so inexpensive. I give you one free month. It's like 45 cents a day. And everything you get access to all the spreadsheets, the upgraded C2P dashboard where you can go out and try to find your next covered call or cash secure put candidate to do what we do. And I'll tell you what, I give you one free month, and the real value is what I'm about to show you with my NVDA trade. I love to talk to the members about the trade, what I'm about to do, and then I execute on that. Now, whether I win, lose, or draw doesn't matter. You as a member get to see it, feel it, and if you want to take on the trade, you can. As a member, you get access to me. Okay, I want you to go to my website, cptdashboard.com, click Upgraded Dashboard, and I give you one free month. Check it out. I would love to welcome you aboard. So fast forward. I own the shares. The shares have fallen from 180 and are getting kicked in the ribs, and now they're trading at about 117. Now, what I think is about to happen is NVIDIA is going to trade to its resistance line. Let me show you what I sent to the members here. We'll talk about it and see if you see what I saw back then. When NVIDIA had peeled back all the way down to 117, I'm looking to use the shares. I got to use the shares, man. Get them off the bench. And back then, I was looking at the chart. I was thinking, well, it's trading for 117, but it keeps hitting this resistance line of about 135. So I'm thinking we've had a tremendous sell-off. I probably shouldn't be doing this at the bottom of the range, but if I'm going to write a covered call, generate some cash flow, I'm going to pick that deep out of the money strike. At this time, it's a 133 strike. I decide to pull the trigger on the trade. I'm thinking to myself, 28 days, NVIDIA would have to rally from 117 to 133, and even if it did rally to that resistance line, it'll probably trade sideways and maybe not break resistance. See, it had already tried to break it twice. And in fact, the second time didn't even get to resistance. So I'm thinking it might actually get to this line, which was about 125. Well, I think it's somewhat favorable to place the 133 strike. But I know NVIDIA can move, but boy, it's been kicked in the ribs. I cannot believe it's going to spike up to 133, which is my strike price. Now remember, I own these shares at 180, so I cannot let these shares leave my hands without losing money. So the trade is placed, and as you can see, I'm going to justify to myself the 133 strike is what I'm going to do. It gives me a little bit of wiggle room to place the trade, let it trade a little bit. If it gets to resistance, and even if it pokes over resistance, maybe the wiggle room will allow me to manage the trade. Well, that didn't happen. Now let me show you what I sent the members when I realized this trade is seriously challenged. Well, I took a chance and it didn't work out. Because right now, NVIDIA is absolutely spiking higher, and on a day for which it was down 10%, it only comes down to 134.95. My strike price is 133, and we have 2 weeks left. So here's the deal. I know I'm going to lose my shares, but here's the problem. NVIDIA had spiked such that the call premiums are still expensive. Even though NVIDIA is trading $1.95 over my 133 strike price, the covered call option for which I was paid $2.45, it's not trading for $2.45 anymore. This thing is trading for some $9. So here I am. NVIDIA is trading for $135. My covered call premium was $2.45. But at this moment in the trade, it's now trading over $9. So if I'm going to buy this option back, alleviate the obligation, I'm going to have to pay over $9 out of the pocket money to clear the trade. And I was not going to do that. Because when a trade goes bad, sometimes you cannot throw good money after bad. Okay? Let me say that again. Sometimes you cannot throw good money after bad. And in this case, it was bad money. I decided to place a trade at the wrong time. Maybe my strike price was correct. Maybe the whole looking at resistance and trying to gauge how it would move in 30 days was correct. Problem is the timing, because right now with the stock market getting crushed, any serious move higher, stocks like NVDA are going to rally. Look, NVDA doesn't have that many shares. They're a high flyer, the biggest chip maker in the world, and Wall Street knows they can make hella jack playing NVIDIA. This is why I really had issues getting involved with NVIDIA back at 180. But here we are. No excuses. We now have to have a plan to deal with this. Let's go ahead and look at the charts, see where it was, where it is, and what ultimately happened. Well, expiration Friday was yesterday, and NVIDIA traded above 133. In fact, by 30 points. Can you believe that? Absolutely missed that opportunity. But hey, we're not going to cry over spilt milk. We have to deal with the trade. What happens is this. At this point, where I probably could have bought it back for $9, I elect not to. Now, this is the true value in this video that you're watching right now. Let's set this up. Remember, I collected $10.47 for the cash secured put. I collected $2.45 for the covered call premium. That is some $12. That is some $12 to $13 in the wallet. When I'm thinking about buying back my option, I should have done it. I should have done it, but I didn't do it. I did not do it because I have had my fingers slammed in the cookie jar when I've tried to do this in the past. So this is where you're going to learn something in this video. Today, you're going to see how I get my hand snapped in the cookie jar, but I'm going to tell you a brief story. I want this to be the little morsel of information you gain from this video so you can be successful in your trades. What I'm going to tell you is this. Years ago, I bought Eli Lilly. Yes, Eli Lilly, and let's just say $80 a share. And I'll never forget, I wrote the 86 covered call. And I'll never forget, the stock was moving towards 86, and I'm thinking, wow, I made my covered call premium. I'm going to have my shares taken away. Life is beautiful, right? Then my man, Mr. Bye, gets on TV and says that Eli Lilly has the absolute next-gen drug that is going to shoot the stock to 200. And the stock rallies above 186. It actually gets to $88 and it is flying. And Mr. Bye guy looks like he's a genius. So what do? Hey, look, I'm very young in this game, and now I'm fearful I'm going to lose my shares and this thing's going to the moon. Well, that's where I make my first mistake in the covered call game. When Eli Lilly is spiking from 80 to 88 in this short amount of time, that call premium, right? I think I got maybe $3. That call premium is rocketed now. And I end up buying it back for over $10 because now Eli Lilly is not only going to 86, this sucker's going to 90, and Mr. Bye is saying it's going to over 100. So for me, I got a little giddy thinking, yeah, I'm going to buy my option back, and I'm going to go ahead and reap the benefits of this thing going to $100 a share. Well, I do that. I had all that cost basis. Remember, I got paid $3 and Eli Lilly's call option is trading for $10. I have to pay $7 to clear this trade to alleviate the obligation for my shares being taken away at 86. Well, what happens? I do that, kicking down 700 bills thinking, man, I caught a break. I was able to buy this back. And now it's time to make some real money as Eli Lilly goes to 100. What happens is over the next couple days, that drug does not get approved and Eli Lilly finds its ass down to 75. Now, let's do the math on this. The math is such that I paid 80, it's trading for 75. I'm down on paper 5 bills. Now let's do the math on how much money I've added to this trade by paying back the covered call. I got paid $3, but I bought it back. I bought the obligation off the board as Eli Lilly's moving higher for $7. That's $4 I had to pay. Okay, so now where am I at? My cost basis is now $71. I'm actually down some 9 points on this trade. Absolutely making one of the most critical mistakes I've made. I bought into the idea that I could buy an option back, alleviating the obligation, and then watching it go higher, making more money. I did not do all this math figuring out what my cost basis was. So now let's go back to NVIDIA. As NVIDIA is trading towards 133, remember what I told you? I got paid $2.45 in premium. My covered call premium is now trading for like $9. I'm going to have to add some $7 to this trade. But what I found over the years, and maybe this isn't the case with NVIDIA here, but what I found over the years is every time I tried to reap the gain of buying an option back in hopes that it shoots higher, it peels back. And Wall Street screws me every time. So these days, it is a golden rule sin of mine to buy back an option. And in this case, I decided, no way. We are not going to buy this back, pay the $9, and add all that cost basis. Now, what I should have realized is that I got paid $10.45 for that cash secure put. Remember that cash secure put happened way back in August? I kind of let it slip that I didn't get that $10.45. So this trade could have actually been profitable. Now, I'd have the shares. I'd still be underwater. I wouldn't have made much, but here's the deal. I'm not sitting with a $3,300 negative in the account. So here's what I want you to take away from this video today. Remember my story with Eli Lilly. Do not overreach and think that if a stock is skyrocketing and you think it's going to continue to go higher because some Mr. Buy guy says it's going to do that, oh no, no, no. I want you to stick with your resistance lines, stick with your plan, and have a plan at expiration. If that plan is to buy it back and you then roll it forward for another credit, hey, God love you. But I'm going to tell you what, over the years, most of the time when I try to do that, I get my fingers snipped in the cookie jar and I find myself adding to the cost basis because these stocks will rally and peel back. And when they peel back, I'm stuck holding the loss of both the covered call premium that I had to pay, plus I have depressed shares again. So anytime your stock blows past your strike price, just do the math. I know this sounds so simple, but do the math. See, I have too many trades, too many spinning plates. So when this NVIDIA trade is clearly going to go bad, I actually forget that I was paid $10.45 for my cash secure put to obtain the shares. Hey, I'm not crying over spilled milk like I said earlier. We're going to move forward. I now have my cash back and we're going to look to do another trade. But when a stock blows past your strike price and you now have to make a decision, what I want you to do is lay out all the credits you received and lay out all the debits you're about to pay. And if you can stomach it, if you can come up with a plan that satisfies you so you could sleep at night, maybe you buy that option back for $9. You take the shares back and maybe look to roll it forward. At this point in the trade, I wasn't willing to do that because now as the trade is ending, look at what NVIDIA has done. It's now plus 30. So let's do the math on what my option is now trading for. It's not trading for $9 anymore. This thing is plus 30. So I'm going to have to pony up plus 30 to clear this? No way. We let the trade go. We let this person take my shares. I lose 3,300. We'll go ahead and do the math, but it's an absolute loss. But what I really want you to take away from this video is this. When a stock blows past your strike price and you're clearly going to lose money, just have a plan, execute the plan. I want you to be calm about it. Don't let your emotions rip you apart. You can't sleep, right? There's always tomorrow. See, the stock market's always a tomorrow game. So we're going to deal with the here and now, and then we're going to come back tomorrow with another plan. Because we have to put cash flow on the table. See, that money I was given, I lost $3,300, but we now have to use that money to put cash flow on the table. Hey, half cup full, we need to continually stay the course even when we lose. Now, I absolutely know right now there's some smart ass in the comments going to say, why would I ever join a membership where the dude is losing money? Well, hey, look, you do remember I'm up $53,000 so far this year, and I haven't even been able to do what I do. Okay? So, look, if you want to have access to me, maybe you have trades for which you're underwater and you're about to have your shares taken away at a loss, and you want somebody to take a peek at your trade, give you the what would John do? That's what my membership's all about. Not only do you see my trades in and out, you see the commentary I give you. Hey, every Monday now is Money Monday. Did you hear that? Money Monday, where I show you my trading desk, and I'm going to show you a trade that I'm watching. And I'll tell you what, a lot of times when I'm watching trades, I do them. I absolutely love showing the members trades, setups that I would do. And then, of course, if I do it, they see it when I post the trade. And they see why I posted the trade. So maybe that helps them in their decision making. Tell you what, a lot of members have benefited from a lot of trades that I like to share with them. Look, I give you one free month, and it's like 45 cents a day. Go get your one free month. I don't know what you're waiting for, because you could see, what did I tell you in the last video? This market was going to move higher, right? Go back to my last video. I am the guy that told you this is going to happen, and it's happening. It may be 2 steps forward, 1 step back, but it is happening. They're dealing with it, and Wall Street has now flushed out all of the fluff, and they're moving it higher. Proof is in the pudding. Hey, look, just look at the charts. With that said, one free month, cptdashboard.com. Click upgraded dashboard. You want to be a part of what I'm doing. I retire next month, and when you're a member, we're going to do Zoom calls in January. We're going to do some mentoring, and I'm going to put out more exclusive content. Hey, look, I'm going to leave it right there. By the way, Facebook, if you go to Facebook and you like my Facebook group, CPT Dashboard, I'll tell you what, there I'm posting up more content for the Facebook followers. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.